Hello traders, what is the ICT London Killzone strategy and how do you trade it? The idea behind this strategy is that the London session would print either the low of the day or the high of the day. This allows the trader to find a low risk, high probability entry when price is in a strong trending environment. This strategy is suited for price continuations, not price reversals. To check a few examples, I have applied the session price range indicator freely available in the MKO5 markets to the charts. Some traders focus only on the London Open, that is the first 3 hours after the London Open. But for this example, we're going to consider the whole of the London session for this strategy. So you are going to find out other quirks and how to go about it. So to execute a trade, we wait for a liquidity sweep of the Asia high or the Asia low. So as we have it here, price has swept the Asia low here as 10 o'clock, July 1. This is the sweep here. You can see this is Asia low, Asia session box. This is the high, and we have price above it here. Now, how do we execute a trade when the price has swept the Asia low and has closed above the swing high? We look for the most recent fair value gap. The fair value gap must have all three candles bullish. So we have one here, we have another one here. So we can simply execute the trade when price enters the 50% of any of those fair value gaps. So as you see, price dipped back into the fair value gap. We have our stop loss at the bottom of the swing, and it takes us all the way up. But what you should know about this strategy is it doesn't provide entry opportunities every day. Okay, that's here is another opportunity here. As you can see, price also swept the Asia high. This is the reason why I don't just use it for the first 3 hours of the London session, because sometimes it provides multiple trade opportunities. So here we have a sweep of the Asia high. We go back to the 1 minute. Let me zoom this out. So as you can see, we have a sweep of the Asia high. We have our swing here. We have this. We have this. So either one we decide to use as the swing to consider for entry. If this is our swing low, price broke it here in the New York session. If this is the swing low we choose to use, you have a fair value gap here. You have a fair value gap here. So this is one entry. This is where's the other one I saw earlier? This is I can't find it anymore. So that's just the basic idea. So throughout the charts, the examples abound. Here, this is July 2, 2025. We have no tradable liquidity sweeps here. This is July 3. If I was to build an expert advisor to trade this strategy, I would say greater than equal to Asian I. So I probably would still find a price entry for July 3. As you can see here, the dominant trend, as you can see, is the bullish trend. So here we have a liquidity sweep above the Asian high. That is why price never made it back to the Asian low like we have in the other. So this is the swing. So it's look at July 8th. This is a beautiful example. We have price above the Asia high. This is the most recent swing. This is going to be the fair value gap we use over here. And when price enters into it, 50% of it are trade executes. So this is the swing. So there are still other examples. This is another good example, July 14. We have the sweep here. We have the FVG here. And you see price tipped into it immediately. And if you choose to use this as your swing, you still have the FVG over here, and price dips back into it immediately and goes all the way up. So this is Euro USD July 2025. You can see the pattern just repeats itself over and over and over again. So in the next video, we're going to design an expert advisor that trades this strategy. So we're going to be able to check out the win rate, uh, the risk to reward, and probably we should limit the trading in the London session to one trade or two trades, or as many setups that presents themselves. So I hope you have enjoyed this video. Do not forget to share, like, and subscribe. And if you have any questions, just drop them in the comments.